Okay, so I want to do a video about DSCR loans and what they are. There is something that's very common in the real estate investment community, and it's an innovative financing option for purchasing real estate. So basically, what DSCR stands for is debt service coverage ratio. Always has to be fancy, right? So it's it's an innovative financing option, and it allows investors to get funding based on the rental income of a property, um, based on rental income and not on your personal income. So let's add a new slide here. So what is a DSCR loan? It's basically a non-qualified mortgage that evaluates a property's ability to generate income to cover its debt obligations. So it evaluates the property ability to generate income. And the debt service coverage ratio, so that's in reference to a specific number. So the debt service coverage ratio, or DSCR, is a number that is calculated by dividing the net operating income, also known as NOI, by the debt obligations. Typically, lenders, when looking at DSCR loan, are looking for a DSCR calculation of 1.2 or higher. So, and it varies from lender to lender. So they want a DSCR of 1.2 or higher. And that basically indicates that the property is going to generate enough income to cover its debt and provide a buffer. So the next question is, and I'm not specifically going to get into a detailed description of how that's calculated, maybe in a future video. But this is just basics, what a DSCR loan is, and just so that it's familiar for people. So how to get a DSCR. So in order to get one, you need to find a lender. There's thousands of them. Thousands online. I would recommend getting a referral from someone that has used a DSCR lender and is familiar with them and has used them and knows that they're reputable and good, etc. There is some credit requirements. It's typically pretty low, so they're typically looking for something like a credit score of 620 or higher. So the threshold is really low on that because they know it's going to be an income generating property. You have to provide property information to the lender. So you need the information about its income potential and expenses. And that's, going to be very detailed. And then you have to submit an application, of course. Whatever they require for that application, you got to submit to them. They're going to do a property evaluation themselves. The lender is going to underwrite the property, underwrite the property to assess the potential and to calculate potential and calculate the DSCR value. And then there's going to be the loan approval. So if it meets all the requirements and it's typically 1.2 or higher, then you may be approved for the loan. So now the benefits of DSCR loans. There's no income verification, faster approval process. These lenders are very good at getting these DSCR loans processed quickly and with a quick turnaround. You can do multiple property financing, where with your traditional banks and credit unions, they have a limit on how many properties they're going to finance for you, typically. There's flexibility in property types. You can use DSCR loans not just for single-family homes. You can also do multifamily units and short-term rentals. There's the opportunity for portfolio expansion. So, you can qualify for more properties than you can with traditional loans, allowing for faster portfolio growth. And then you always have to cover the risk and drawbacks of any financial related decisions, right? Especially when you're looking at loans and things that you're taking a risk on. So there's going to be higher interest rates, where if you are just getting into the property investment or real estate investment environment and getting properties that generate income, the higher interest rates may not be as important to you as long as the property is cash flowing, right? Larger down payments are usually required, anywhere from 20 to 40%. Prepayment penalties, typically, they're looking at making their money off this loan, and so typically there is a prepayment penalty, which can be costly if you plan to sell or refinance within a short period of time. Vulnerability to market fluctuations. So if the rental income decreases due to market changes or vacancies, then you may struggle to meet loan obligations. Limited loan amounts. DSCR loans typically have a maximum loan amount, which may not be suitable for extremely expensive properties. So, they may not do more than 800,000 or but so if you have property that's like 3 million, you may not be able to use a DSCR loan. Property condition requirements. Typically, a DSCR lender is going to be looking at lending on a property that's move-in ready and not in need of major repairs or renovations. So, in conclusion, DSCR loans, they offer a unique opportunity for real estate investors, to get into real estate investing, expanding your portfolio, not having to rely on personal income for qualification, but it is important to consider the higher costs and potential risks. Do your due diligence, do your research, look into various options that you may have, and understanding the pros and cons. You don't want to make a rash decision. You want to make an informed decision and ensure that DSCR loans align with your investment strategies and goals. So, um, oh, I should have been typing while I said that. But let's see, unique opportunity, real estate investors, um, to enter REI and expand portfolio to, there's, no income qualification, there's a low entry threshold. There's you need to take into consider the high cost and potential risks, and assess the pros and cons, and and make informed decisions. So hopefully that helps. And